So the scenario reads as follows. ABC Limited was formed with an authorized share capital of 4 million ordinary shares. On the 31st of December 2019, the company issued a prospectus offering a subscription of 2 million ordinary shares at an issue price of 75 cents each. The application closed on the 31st of March 2020 and all the shares were allotted. A receipt was issued for all amounts received. So what is our required? So we are required to prepare the cash receipts journal, prepare the relevant accounts in the general ledger, and to show the effect of the transactions on the financial statements. The two important dates you need to take note of is the 31st of December 2019. This is when the prospectus was issued, but on the 31st of March 2020, this is when we assume this is when we received all the money amounting to the amount of shares which was issued, which is 75 cents for a share for 2 million shares. So in our cash receipts journal, we put in the 31st of March 2020. From whom did we receive this money? We received it from our shareholders. That's what we put down under details. And then how much did we receive? As I said, it was 75 cents per share for 2 million shares. So that is 1.5 million. Because ordinary share capital isn't an account we use every day, we will find it in the sundry accounts, and we have the same amount of 1.5 million, and under the details there would be ordinary share capital. So you want to also show your marker how you got 1.5 million. So underneath the journal, you can write down your workings. So that can give you pot marks. Then you need to remember to close the journal by totaling the amounts. And you can see that the cash receipts journal balances. The bank amount is equal to all the amounts that we have received. We now move to required number 2, where it reads that we need to prepare the relevant accounts in the general ledger. We need to firstly understand that every debit has its corresponding credit, right? Starting with the ordinary share capital account, this is an equity account, meaning it will increase on the credit side and decrease on the debit side. So we need to open our ordinary share capital account, and we know that it's increasing because we sold shares. Now we have money. And how did we get that money? That money is sitting in our bank account. That is why we have bank there, and it is an amount of 1.5 million. Then we're looking at bank. So bank is an asset, meaning that it increases on the debit side and decreases on the credit side. So we assume that that was the only receipt that we received during the year. So we'll have on the last day of the financial year, which is the 30th of June 2020, a total receipts of 1.5 million. Again, a very important thing that you need to do, this is working marks that you can get, is to close off the accounts. It's 1.5 million for ordinary share capital and 1.5 million with a bank. Usually with a bank, you have total payments on the credit side. But for the purposes of this example, we assume that that's just the only activity that happened in bank so that we can close off the account. And we have balance over there. Now we move on to the final required, which asks us to show the effect of the transaction on the financial statements. So the financial statements is your statement of comprehensive income, your statement of financial position, and your statement of cash flows. So our bank increased by 1.5 million, and our bank is our current asset. So you have your non-current assets and all of those things, but our current assets, bank falls under cash and cash equivalents, and that's where we have 1.5 million. Then the next thing that happened is that we issued shares, right? That affects our owner's equity, meaning our owner's equity increased by 1.5 million. And that is in the statement of financial position, goes under ordinary share capital of 1.5 million. If you look at the statement of financial position, our assets equals our shareholders' equity and liabilities, and therefore it balances. We then need to ask ourselves, what effect did this transaction have on the statement of cash flows? So we received cash, and the statement of cash flows has three sections, which is cash from operations, cash from investing activities, and cash from financing activities. So in order for us to understand where in the cash flow statement this transaction will fit into, we ask ourselves, was it a cash received from operations? No, it was not. Was it cash received from investing activities? No, it was not. Was it cash received from financing activities? Yes, because we issued shares which form part of our ordinary share capital in order for us to finance the business. Again, this is a very much watered down version of a statement of cash flows. We have cash flow from financing activities. We're going to have our share issue, which was 2 million shares at 75 cents. You can write that out actually, and that would give you 1.5 million.